Meta is a confirmed trap right now, and I am going to show you exactly why the data is screaming sell. Meta has been sliding hard, sitting at $574 and change, well below its key moving averages, with a composite score of negative 80.1. That puts it firmly in what I call a real trap territory. Here is why I called it that. Let us start with the trend, because the moving averages here are telling a brutal story. The 20-day EMA, which tracks short-term momentum, is sitting at $594. Meta is trading below it. The 50-day EMA, which reflects the medium-term trend, is up at $623, also above price. And the 200-day SMA, the big one that tells us the long-term health of the stock, is way up at $685. When a stock is trading below all three of those levels, that is not a dip. That is a stock in a confirmed downtrend across every time frame that matters. Think of those moving averages like floors in a building. Meta has fallen through every single floor. Now here's where it gets interesting on the momentum side. RSI, which measures how overbought or oversold a stock is on a scale of 0 to 100, is sitting at 41.2. That is not oversold. That is mid-range weakness, meaning there is plenty of room for this stock to fall further before it even gets close to a bounce signal. MACD is showing an improving reading, and I want to be careful here because improving does not mean bullish. It just means the rate of selling is slowing slightly. The ADX, which tells us how strong the current trend is at 26.4. That confirms a real trend is in place, not just noise. The momentum picture here is weak with no real reversal evidence yet. Volume is where smart money leaves fingerprints, and what we are seeing here is a distribution pattern. Distribution means institutions are quietly selling into any strength, offloading shares to retail buyers who think they are catching a deal. The money flow index, which combines both price and volume to show whether money is flowing in or out, sits at 45.2. Anything below 50 means more money is leaving than entering. This is not accumulation. This is an exit. The price pattern here is a series of lower highs, which is textbook bearish structure. Every time Meta tries to bounce, it gets rejected at a lower level than the last bounce. That tells us sellers are getting more aggressive, not less. Meta is also hugging the lower Bollinger Band, which is the outer boundary of normal price range on the downside. There is no squeeze forming, meaning there is no coiled spring energy building for a reversal. The band is wide and price is at the bottom of it. That is a trend continuation signal, not a reversal one. Looking at market structure, we have a confirmed bearish break of structure, which traders call a bearish BOS. This happens when price breaks below a previous significant low, signaling that institutional sellers have taken control and the prior uptrend structure is broken. There are no nearby order blocks, meaning there is no obvious level where big buyers have previously stepped in to defend price. No liquidity sweep has been detected either. In plain English, there is no sign of institutional accumulation happening beneath the surface here. The key levels you need to watch are straightforward. The only meaningful support below current price is down at $524. That is a long way down from $574, which means if this stock breaks further, there is a lot of air underneath it. On the upside, resistance starts at $600, then $623, and then $640. Meta would need to reclaim all of those levels before the trend picture changes at all. So here's the bottom line on Meta. This is a confirmed trap with a composite score of negative 80.1, one of the stronger sell signals our system generates. Let me give you the 5 reasons this score is where it is. First, price is below the 20, 50, and 200-day moving averages simultaneously. Second, volume is showing active distribution, meaning sellers are in control. Third, the price pattern is lower highs, which is a bearish continuation signal. Fourth, the market structure has already broken down with a confirmed bearish break of structure. And fifth, the transition bonus is negative 28 points, which means the cycle stage shift is adding significant downside pressure on top of everything else. The bottom score is 0. There are no confirmed bottom signals anywhere in this data. This is not a stock that is quietly building a base. This is a stock in active distribution. For the bulls to have any case here, Meta would first need to hold and bounce from that $524 support level with a surge in buying volume. Then it would need to reclaim the 20-day EMA at $594 and close above it on strong volume. RSI would need to push back above 50 to confirm momentum is actually shifting. Until those things happen in sequence, any bounce is just noise inside a downtrend. The bear scenario is the higher probability path right now. If Meta loses that $524 support level on high volume, there is very little structural support below it. The next meaningful area would be a significant gap lower. Watch for RSI dropping toward 30, which would be oversold territory, and watch for volume spikes on down days. Those would signal accelerating distribution and potential capitulation ahead. 3 things to take away from this. 1. Meta is in a confirmed downtrend across all time frames with price below every major moving average. 2. Distribution volume and a bearish break of structure mean institutional money is leaving, not entering. 3. The only support is at $524, and there are 0 confirmed bottom signals in the data right now. That is today's Dip Detective Deep Dive for Meta. Subscribe for more bottom or trap breakdowns every week. Not financial advice.